So, what if I told you that the smartest real estate investment of the next few years isn't some shiny new skyscraper, but a crumbling, empty shopping mall? Sounds a little crazy, right? Well, today we are diving into the Ghost Mall Gold Rush and pulling back the curtain on the secret playbook for turning retail ruins into investment gold by 2026.
Let's just start with the big question that seems to defy all logic. How on earth could these empty, derelict shopping malls possibly be the smartest real estate investment you could make? I know, it sounds completely impossible, but the answer actually uncovers this massive hidden shift that's happening in our economy right now.
To really see the opportunity here, you first have to understand the crisis. Because buried inside this massive commercial real estate collapse, there's a hidden key. Let's call it the paradox of emptiness.
I mean, you've seen the headlines. Commercial real estate, or CRE as it's called, is in a total nosedive. Stores are shuttering their doors faster than ever. Office buildings have become these eerie ghost towns, and honestly, the whole foundation of the sector feels like it's cracking right under our feet. Just think about the spectacular collapse of WeWork. They were one of the biggest office tenants in major cities, and their downfall just poured gasoline on an already raging fire. Today, as you can see here, over 17% of all U.S. office space is vacant. That's not just a market dip, that's a full-blown crisis for landlords.
So, how in the world does this disaster create an opportunity? Well, it happens when two massive economic storms collide, and right there, at their epicenter, a really powerful and unique investment strategy is born.
Okay, the first storm is what insiders are calling the wall of maturity. By 2026, a mind-boggling $1.8 trillion in commercial real estate debt comes due. This isn't just a problem, it's a financial doomsday clock. See, these loans were signed back when interest rates were basically zero. Now land loans have to refinance in a world of much higher rates, and with less rent coming in because of all the vacancies. The math just doesn't work. Their income can no longer cover the new higher mortgage payments. Lenders will refuse to refinance, and that forces many to sell their properties at a huge discount.
Now, for the second storm. While all those offices and malls are crumbling, another real estate sector is absolutely exploding: industrial and logistics. We're talking about the backbone of our e-commerce economy, the warehouses and the last-mile delivery hubs that get your packages to your door in a day. For these properties, demand is through the roof, and vacancy rates are at rock bottom. It's truly a tale of two markets moving in completely opposite directions.
So, you've got desperate sellers on one side and huge demand on the other. The key to connecting them, the absolute secret to unlocking all this value, is a surprisingly overlooked legal tool: zoning. This is the playbook.
The key term here is entitlement, but a much better way to think of it is zoning as an asset. Okay, what is it? It's the legal permission from a government that says what you can build and how you can use a piece of land. And here's the secret. This piece of paper is often worth more than the building sitting on the land. It's the difference between what a property is and what it could become. You can think of this as real estate alchemy. Step 1, you find a problem property, a dead mall, an empty office park. Step 2, you match it with a pressing market need, like that insatiable demand for logistics hubs. Step 3 is petitioning the government to rezone the property. But the most critical step, the one that makes or breaks the entire deal, is engaging with the community. If you can get their buy-in, you can then convert the asset, turning that lead into pure gold.
Now, this strategy sounds great in theory, but how can an average investor actually get in on the action? Well, the easiest way is through a special type of company called a REIT.
A REIT, or a real estate investment trust, is basically like a mutual fund for real estate. It's a company that owns a big portfolio of properties, and you can buy shares of it on the stock market just like any other company. It's the simplest way for you to invest in a wide range of properties without the headache of, actually owning a building.
But here's the catch. Not all REITs are created equal. You need to find the ones that are laser-focused on industrial and logistics, the ones whose entire strategy is to actively convert these dead properties. Their growth is tied to e-commerce, not how many people are sitting in an office. But look really closely at the key risk for this winning strategy. It's not a market crash or bad loans. It's local politics. And that brings us to the brutal truth of this entire strategy. The biggest obstacle, the one thing that can completely derail this Go Small gold rush, has absolutely nothing to do with market fundamentals. Yeah, the biggest hurdle isn't financial, it's political. You can have the perfect property and a flawless business plan, but if you can't win over the local community, your investment is dead in the water. Your capital gets trapped in a worthless asset.
Welcome to what's known as the NIMBY Gauntlet, not in my backyard.
The moment you propose turning a dead mall into a bustling warehouse, you can unleash a storm of opposition. And it's understandable. Residents worry about all the truck traffic, the noise, the entire character of their neighborhood changing. This can ignite fierce political battles, endless environmental reviews, and ultimately, it can kill your entire project.
So how do you win this fight? Well, the smartest players know you don't. You don't fight the community, you partner with it. They're patient, they go door to door, they hold meetings, they actually listen, and they compromise. It's slow, difficult, painstaking work, but it is the only real path to victory.
All right, let's pull all of this together and look toward that 2026 horizon. What we're really seeing is a story of radical transformation.
This is the before, the ghost mall. It's a relic of how we used to shop. It's a dead weight on the community, a symbol of economic decay, just sitting there.
And this is the after, the last mile hub, a high-tech automated fulfillment center that's buzzing with activity. It's an asset that actually creates jobs, generates tax revenue, and powers the digital economy. This is the conversion. This is the gold rush.
Ultimately, this isn't just about real estate. It's about the massive and often painful shift from a physical world to a digital one. We're seeing it play out in our malls and offices today, which really makes you wonder, what industry is next?